Hello, my name is Mike Florin, and I'm the owner of Low Cost Mortgage. Today's your weekly update for December 10th, 2024. We have an investor that has made a claim and they've made a promise, and that promise is the following. You will get a clear to close within 15 days of submitting the loan to them, or us submitting the loan to them, or they will give a lender credit of $2,500. There is some caveats to that. There's some rules. So for example, the appraisal needs to be ordered immediately. The documents need to be put in right away. If the borrower is delaying in documents by more than 24 hours, et cetera, there's some rules to it. But we have an investor that is willing to say, we will be clear to close within 15 days of when they receive it, which is typically about anywhere between 1 to 2 or 3 days after we receive the contract. They will have a clear to close. But if you want to talk more about that, give me or your loan officer a call, and we will talk about that and how that one investor is dealing with that and what those caveats look like, right? But they're just saying they're basically rigged for speed. Now for cost, they are maybe an eighth more expensive than the cheap investors, sometimes a quarter, but a lot of times, depending on the deal, an eighth or a quarter is definitely worth the speed. It just kind of depends. What's happening with the deal. Now we just got some clear to closes, 16 days and so before closing, quite a few. If you follow me on Facebook, I put some of the clear to close emails there, or the messages saying, ooh, clear to close 13 days. I don't put all of them there because it would just be every day the same damn thing, you know, clear to close 8 days prior, 12 days prior, 21 days prior. It's just, sometimes deals are clear to close really early and sometimes they're not. The main reason, I've said it many times, I'm going to say it again. The main reason that a deal is clear to close quicker is how fast the borrower gets documents to us or your lender. So for you as a realtor, if you want stuff to happen fast, then you need to do home inspection quickly, inspection objection quickly, get it to the point where the lender can order the appraisal quickly, make sure that borrower, your buyer, gets documents to the lender quickly, if it's us or anyone else. I know from our end, if we don't get documents quickly, we're going to pull the buyer's agent in fairly quickly in the process. Maybe after the second or third request, we'll pull the buyer's agent in saying, hey, Bob or Ron or, Amelia, I need these docs and I need them now. And even if we're 3 weeks from closing, we're going to say we need them now because that's how we operate in the lending space. We operate in the term of right now, not later. So let's look at rates real quick. Again, you can go to Low Cost Mortgages. We have a rate search tool. It's lcmloans.com/rates. But when we're looking at conventional, so if I run your basic vanilla conventional, we're looking 740 FICO, 5% down, loan amount $400K. That's what we're going to do, is loan amounts $400K across the board for all of these. But you're looking at, I think your mid sixes today. And if you look, I'm going to pop up a chart real quick here. It's actually up here above my screen. But we're on a 3-week downward trend in rates right now. Today's slightly higher than the trend line would show. But again, downward pressure for November, December. That's usually what happens. Well, the election kind of put a little tossle in there, but we're downward pressure right now into December. So your really, really good rates should come between Christmas and New Year's. That's historically where it is almost every single year. But anyways, okay, conventional, you're looking mid-ish sixes. I've got 1, 2, 3, 4, 5, 6 that are right in the mid-ish 6 range with no origination or discount. 1 point of discount would put you in the low sixes, really, let's just say really low sixes on conventional, okay? We're going to take this, we're going to change it to FHA, and remember FHA is 3.5% down, so conventional would be 5, FHA is 3.5. And if we do that, we're looking at this investor, you're looking at mid-ish high fives, right? Just over the middle fives area. This one, which is a really cheap investor, would be right at the middle of fives, and 1 point puts you in low fives. So conventional mid sixes, 1 point low sixes. FHA and VA is going to be very similar to FHA, but VA, FHA, mid-ish fives, maybe slightly over the middle point of fives. And then 1 point of origination and or discount, because remember, those are the same. 1 point puts you right into the low fives. So that's where we are this week. Again, rates change every 10 minutes, up or down, just a little bit. And then some days you're going to see rates shift 1/4 percentage point or an eighth. That's a pretty big movement for a day. But that increment doesn't happen immediately. It's usually a little bit, eighth, little bit, quarter from the beginning of the day. Typically, though, what you do is you see it kind of do this and it kind of uptrends. And afternoon, it usually either accelerates up or kind of levels and then tapers down. A lot of times, just a quick snippet for you guys, at the end of the day, so if you look at the end of the day treasuries, and if the end of the day treasury looks like it's tipped up, expect rates to be up the next day. Usually it is. And if the end of the day is down, then just expect that next day to be lower. It's really nice. That last 2 hours of trading can really predict with not absolute certainty, but pretty close to what's going to happen that next day or the trend after it starts the next day. So for example, if it comes down at the end of today, then tomorrow it might start higher, but then you'll see it just start to come down. So anyways, my name is Mike Florin. Have a great day. Talk to you later.